So the stock market is crashing, but let me explain what's going on. My name is Carter and we talk about everything money, stocks, money management, trading, investing. So subscribe and join the team. So let's just jump into it, guys. So what's going on? Well, as of today, an article here came out and really broke down the U.S. job reports, which is one of the most important factors when it comes to the U.S. economy, for future growth, for keeping the markets alive. If people are working, that's great because there's going to be more money pumped into the economy because people will spend that money on things which will keep jobs and companies afloat and businesses afloat. So looking here, guys, the U.S. market brought in about 177,000 jobs, which is great. But comparing it to July, which brought in over 370,000, so 370,000 versus 177,000. So a massive decline since July. Okay, so we've seen a slowdown in jobs. Well, that's not the only thing we've seen in the past couple of weeks. We saw the Federal Reserve increase the rate to the highest rate we've seen in the past 22 years. So we've seen a slowdown on jobs. We've seen massive hike on the interest rate. So those two things by themselves could easily crash the market. Now, will it is the main question. Well, eventually, right now, the reason why we're seeing the Fed increase the rate isn't because they want to see the market crash, is because there's so much money that was pumped out into the economy. So the inflation is super, super high. On top of those other things, we've seen, the Federal Reserve missed their target rate for inflation by 2%. So now they're increasing the rate. So we're just seeing a recipe of all these things that could easily crash the market, but they're increasing these rates to cool down inflation. That's why they do it, because if you have a higher rate, people don't spend as much. The issue is people aren't working, so there's not going to be as much money spent anyways. So just those two things by themselves could easily crash the market. So what should you do, and what does this honestly mean? So for me, I think if you're looking to invest, I think a good strategy, honestly, would be to just dollar cost average. So what that is it's investing consistently rather than just dumping a ton of money into the market right now. Okay, investing consistently is a great way to invest during these times because, yes, you could be buying at an overvalued price. So if the market crashes, you're just averaging down that cost. So once the stock market recovers, you make a lot more money. On top of that, another thing that I would recommend doing is start saving money. If you're not saving money, now is the time to do so. Whether it's $10 a week, $5 a week, just start saving money, because what we could see happen is honestly everything start going down the drain. At the end of the day, when you look at previous history, looking at the 70s, which the U.S. economy, the U.S. government spent trillions of dollars on the Vietnam War. In the 70s, they all paid for it. We saw one of the highest interest rates. We saw, virtually a stunt economy, which there was no growth, but yet no sell-off. I think that's what we could see happen. And it was just a very, very rough time for the U.S. I think we could see that happen for the next couple of years, where we don't see a lot of growth, but we don't see a lot of sell-off. I just think we could see consolidation. So saving money is a great way to just give yourself a little backbone. So if something does happen to your job or to your own savings, or, maybe you get nervous and you crash your car or something, whatever, you have that savings that could definitely go a long way, especially during times where we see high rates, where we see, a shaky job economy. So guys, that's why right now the stock market, we could get some sell-off. I would not be surprised if we do, but at the end of the day, who knows? No one knows. If I knew, I would be a multi-millionaire. I just love to look back at previous history, just because history just tends to repeat itself. So, no one knows what's going to happen with the markets. No one does. We could see the markets go up another 30% this year before that crash. I just think looking at these two very, very important indicators, which is the job growth and the Fed increasing the rates with inflation being over 2% from their target, that could be a recipe for a possible sell-off. So guys, hope you guys all enjoyed the video. If you guys did, hit that like button, subscribe, and we'll see you guys in the next one. Take care.